Which one did you have a question on?
A.
A, okay. Have you gotten to B yet?
Yeah, I went
Okay.
down to D, and then I started realizing I'm just throwing numbers at it.
Okay.
So,
Okay. So this one, they're giving you guys some information. They're giving you some, they're not telling you what, well, some of them, they do give you the filing status, or they give you what the filing status isn't. Some of them though, oh no, that says head of household as well. Oh, I thought they actually didn't really give you the filing status. Okay, well, we'll go through A. Okay, so determine the tax liability in each of the following instances. In each case, assume the taxpayer can take only the standard deductions, so we're not gonna worry about the itemized deductions at this point. Use the tax tables if the taxable income is under 100,000, tax rate schedules if the taxable income is above 100,000. What they've given us is the AGI. So you have to kind of think, go back to your simplified tax formula and remember where, well actually your expanded tax formula, not your simplified one. Your expanded tax formula, and remember where AGI lands in the whole calculation. You can think of that 1040 as just one long equation, right? But each of these items has to fit exactly in the right spot in that equation in order to come up with the correct solution. So AGI, and I can't remember the line off the top of my head, but it comes into play after total income, but before taxable income. So taxable income is going to be that line, that very last line on the first page of the 1040, and that's what we're going to use to determine tax liability. For AGI, we have to make an additional adjustment to it, and that's the standard deduction in our case. When we get chapter 5, we're going to be using the itemized deductions instead of the standard deduction, but for our purposes right now, we're going to use that standard deduction. So if we think about, let's see, so look at A. We got a single taxpayer, not head of household, with AGI of 23,493 and one dependent. Now, they are not head of household, but they have one dependent. This one dependent, if they had not told us not head of household, then I would assume that when they're saying one dependent, that this person actually is head of household. But they've told us not head of household here. So we're going to use that information to determine what our standard deduction is. All right, so our AGI 23,493. Single taxpayer, what's the standard deduction? 13,850. This arrives at our taxable income. We have 43. Somebody can do the math for me so I don't have to carry. Okay. So,
9,000 something.
yeah, 20.
9,640.
Okay, so our taxable income is 9,643. This is well under $100,000. So we can use the tax tables based on filing status, which they told us is single. So let's go to 9643. Whee! Oh. No. So 9643 is between 9,600 and 9,650, and they are single, $963. Are you gonna tell me right now that that's what you put in and it was not right?
No, I
Oh,
I
okay.
check my work.
Oh, okay.
So the one, so
One,
he's
you have to
there.
save it.
That's right, you only have one. Yeah, okay, so 900, so I'll check my, how's that? I'll help you out there. Oh,
Wait, wouldn't the tax liability be that mine? Oh. Wait, what? What is it asking for?
The tax liability.
I thought you got that when you took your taxable income times your tax rate equals tax liability, but that's your actual,
That's if you're using the schedules
yeah, that's if you're using the schedule, and you only have to use the schedule if you're over $100,000. If your if your taxable income is over $100,000. Let's do one where it does that.
so. Okay, I just copied like the formula or the quick thing down from one of your videos, so this is
Sure.
only if over 100K.
Yeah.
Otherwise, your tax liability is the actual number pulled
From that table, right. So let's do one that we do have to calculate. And keep in mind, round your intermediate calculations to 2 decimal point places. Make sure you follow those, because otherwise you'll probably miss out. So here we've got a married couple filing jointly, AGI of 301,947 and 1 dependent. For these problems, the dependent doesn't matter. Okay, they're just messing with you. Okay, so like this one, I mean, they're giving you the filing status here. The only time, like I said, the only time that would matter is if, so here, head of household, 2 dependents, okay, good, that makes sense. I'm not quite sure what the situation is here, where we've got a single taxpayer, but they're not head of household and have 1 dependent. Could be a very specific situation where that is the case that I can't think of off the top of my head, but let's do E. We got a married couple filing jointly. AGI is 301,947. What's our standard deduction? They're married filing jointly.
27.
That means our taxable income. Whoops, that's one word. Is 247. 270 minus 7 is 4. 274, 247? Okay. So our taxable income is 274, 247. Now this one obviously is over 100,000, so we can't use the tax table. We have to use the tax schedule, which is what we're gonna do. All right, now we got to determine which tax schedule we want to use. We're gonna find the married filing jointly one because it's got to match our filing status. So it's this schedule that we're gonna use. Find their taxable income within the range, so that's between 197.50 and 364,200. So our calculation is 32,580. Put that over here. All right, put that to the side for a second. Plus 24% of the excess over 197.50. We're going to subtract that. What is this? 7, 3. Somebody help me.
83,497.
4. 83? Okay, 83,497. Then what do we do next? I'm sorry, say that again?
Oh no, multiply that by 22%.
24%,
Oh yeah, sorry.
Yeah.
hold on.
which we get
20,039.28 cents.
52,619.28 is what I get. We'll test it out. I don't know, let's see if it wants. Is this E? It rounds. Oh, and it won't give you. Really? Don't you know who I am? Okay. Exit, get back. Okay. So that's really all you're doing. You're just taking that extra step of subtracting the standard deduction. What's that? Tendency doesn't mean anything here. Eventually it might. Right now it doesn't, because they gave you the filing status. He said if they didn't give you the filing status, then they might be asking, you might have to figure out. If they're, and usually, I mean, that's gonna be determine whether you're head of household or single and that sort of thing. Other questions? Is that helpful?
What happens with, I was doing number 3, and it says that Peter and Elizabeth Mary filed separate, but Elizabeth itemizes her deductions. So how does that affect
Did it give you any
the standard
information?
deduction?
Yeah, Peter cannot take the standard deduction,
So would the answer be 0?
0. If there's
Oh.
no specific, like if there's nothing listed, they can split their itemized deductions.
Mhm. So
But
if one spouse itemizes.
One spouse itemizes, the other one has to.
Okay.
Yeah, and that's to prevent people from, oh, we've got $50,000 of itemized deductions, why don't we file separately? And then overall, we're gonna get 50,000 plus 27,700. Prevents that from happening. Yeah.
Number 3, D.
3D,
Yeah. Here who from 1,100 working on part-time job.
So and claim as a dependent, yeah.
okay, Karen, who earned $1,100 working a part-time job, she can be claimed as a dependent by her parents, so they're looking for the standard deduction here for Karen. So remember, let's go back to our chapter. So for standard, when a taxpayer can be claimed as a dependent on the return of another, the basic standard deduction for the taxpayer is the greater of $1,250 or the taxpayer's earned income plus $400. So in this case, 1,100 plus 400 is 1,500. That's greater than 1,250. So her standard deduction would be the 1,500.